Incomplete record MCQs. What are we asked to find over here?
The trader's drawings.
How do we do that?
So closing capital plus drawings minus your at the opening capital should give you your net profit.
So we can prepare a capital account,
Yeah,
closing capital,
closing
drawings we're
capital will come
supposed to
on
find.
debit side.
Yeah,
Yeah, so drawings will be a balancing figure.
okay. Opening capital and profit would come on the credit side. Yeah, so
Yeah,
15,000 minus 13,800
yeah.
makes it.
1200.
Okay, so that's the balancing figure and the answer is A.
Yeah,
Can we go to the next one?
yeah.
Tell me what you did.
Okay, a company has capital of 244000. Its non-current assets are 16100 and its current liabilities are 4500. So what I did was I took capital as
Current liabilities is
244.
4,500 and there are no non-current assets.
Yeah. So you
No
will
non-current
add
liability.
your current liabilities
Okay.
and then you will subtract your non-current assets.
So ideally on our liability side, we have capital, current liabilities and non-current liabilities. And on
Yeah,
our asset sides, we have our non-current assets and current assets.
current assets.
So what do we do? Our total assets is equal to our total liabilities. And we are looking to
Yeah,
find out that the current assets, that would be our balancing figure.
yeah.
So what is the total of your liabilities?
The total of my liabilities are
28,900.
4500.
And you
Yeah,
are,
28,900.
yeah, so from that you will minus your non-current assets. What you're going to get is your current assets 12,800.
12,800.
So the answer is option C. They've not given an option D also where.
Yeah.
Okay, now let's go ahead to the next one. What did you do?
Uh,
I'm expected to find percentage of gross profit to revenue.
yeah.
So
So
I'm expected to
basically,
find
first you have
margin
to
or
find
markup.
cost of sales.
Okay, fine. So revenue minus cost of sales gives us gross profit.
Gross profit. So gross profit comes as 10,000 and you'll put
How
10,000 as
does
a
it come as
percentage of,
10,000?
look, basically, uh, opening inventory,
Hmm.
3,000. Okay.
Hmm.
Plus closing inventory,
Opening
which
plus
is what?
purchase minus
I
closing
mean, plus
give us.
purchase 3200, and then you'll minus 1000,
Okay, so
which gives us
32,000
34,000.
plus 3,000 minus 1,000. So cost of
So,
sales is 34,000.
okay, then you'll minus this from your revenue, which is 44,000 minus 34,000, which is 10,000, which we have to show as a percentage of the revenue. So we'll divide it by the revenue.
So gross profit divided by revenue times 100.
Yeah, times 100 will give us the answer, which is
Gross profit is 10,000,
22.72%.
revenue is 44,000
Yeah,
times 100.
yeah, so 22.73%.
Okay, so the answer is option C.
C.
Did you do the next one?
No, not yet.
Okay, fine. I'll pause the video. Okay, what is the fourth question?
The fourth question is Jamal did not maintain double entry records during his first year of trading. Which item is not recorded for like calculation of credit sales?
That means we have to see the SLCA format. If I want to find out credit sales, the account that I am going to look at is the SLCA. Okay, so
Hmm.
bad debts is recorded in SLCA. Discount item
Yes.
is recorded. So
Yes.
provision for doubtful debts is not recorded.
Not recorded.
So this is not required in order to calculate credit sales.
Yeah.
Answer is option C. Go to the next
Yes.
one.
Okay. Over here, we have to find out his profit or loss for the year. So
Okay.
we will add our non-current assets with the
Do we
current
have
assets.
it's by which method?
Capital.
So we
So
have
you
our
have
opening
to
capital,
find capital for both years. First year's opening capital is given. We have to find closing capital, and then we
closing.
have to minus them.
Okay, so how do you find the closing capital?
Non-current assets plus current assets minus non-current liabilities minus current liabilities.
Okay, drawings will come where?
Drawings will come in the you will add it with your closing
So we have
capital.
the capital account. Can you see my screen?
Yeah.
So can you give me the closing capital? What did it come?
One sec, I'm putting it in my calculator.
It was 83,000. So profit would be my balancing figure. So what is
Yeah,
the total of my debit side?
total debit side.
102,000
Okay.
minus 90,000.
10 plus
So profit was 12,000.
12,000 for the year profit.
So profit is 12,000 for the profit, so it is B.
Yeah,
Okay, the next one.
okay.
Hmm.
So in this, basically, you just find his capital. So
Hmm.
you'll add all his assets and you'll minus all his liabilities.
Okay, come on. Give me
Okay,
one that I
so,
have to minus.
huh?
What I have to
The
minus, I'll put in bracket.
a trade payable.
Petty cash is an asset. Rent receivable prepaid. What is
This
this?
is a liability.
Okay, it's pre-received income.
Okay, then bank overdraft is a liability.
Okay,
And then, yeah, that's it.
just put these things in bracket. So what is the amount coming up to?
103650 plus
103,650 plus 490 minus 5380 plus 130 minus 240 minus 2,900 plus 5120. So I'm getting 10870. What are you getting?
um
Amount over here is wrong.
yeah, it's 1,00870, no?
No, this is wrong. The insurance prepaid, it's not insurance prepaid. This is inventory. And inventory is 4960. Okay. Insurance prepaid. This is insurance prepaid. That is 130. Trade payables is correct. 5380. Actually, this sum is wrong. Can we do the question from here, please?
No.
Yeah. We do the question from here. We'll do
Okay.
assets minus liabilities. So, non-current assets, inventories, asset, insurance, prepaid assets, trade payable would be minus petty cash asset,
Rent
prepaid
receivable,
income, liability, bank overdraft
bank
liability,
overdraft liability,
and
and trade
trade
receivable
receivables
asset.
asset. So we will
Yeah,
do
so
103,650 plus
plus 49
1960
plus
plus 130 minus 5380 plus 100 minus 240 minus 2900 plus 5120. So it is 105440.
105. So it's A.
The answer is option A. Okay, you can go ahead, please. Come on, the next one. How is markup calculated?
Uh, what question is this?
Question number 7. How is markup calculated?
Cost of sales divided by gross profit.
Hmm? Markup is gross profit divided by cost of sales.
Yeah, that's what I meant.
And margin is?
Margin is gross profit divided by revenue.
Okay. Next one.
Next one is uh, a loss of 1350.
Okay, can you give me the capital account format?
Okay, the capital account format
So the
on
opening capital was
your opening capital is 47600 on your credit side. Okay, then your introduces person motor vehicle. This is additional capital which you will put on your credit side.
hmm,
Okay, then drawings of 7500 which will be put on your debit side, and your closing capital which is 51250 will put on your debit side, and when you minus them your balancing figure will be your profit for the year, but this time it's a loss of 1350.
okay. What is the total of the credit side?
The total of the credit side is 2 minutes. 47600 plus
60,100
1 to 500, 60,100.
minus 7,500 minus
And
51,250. Okay, 1350 is the loss. Fine.
uh,
Go to the next one.
okay, now you can put brackets on this 9,000 bank overdraft,
Hmm.
trade payable, and loan repayable on 70,000. Okay,
Why,
and
what
then
are
you
we
just
asked to find out?
your capital employed,
What is the formula for capital employed? How do you find out capital employed?
assets minus liabilities.
No, it's money used in business.
Oh, I don't think
Okay.
I've done this.
Money used in business, it would be capital plus non-current liability, either one way or the other way to find is total assets minus current liabilities.
Okay, current
We already
liabilities.
have our total assets, right? We
Yeah,
have our non-current assets, inventory, and trade receivables.
yeah,
So our total assets would be 121,000 plus 35,000 plus 29,000. What is
yeah.
our
So
total
yeah,
assets?
uh, I don't know actually.
185,000
Yeah,
minus current liabilities. So I have two current liabilities.
so current liabilities are your trade payable, which is 2500,
25,000.
and your bank overdraft.
So minus 9,000 minus
Yeah,
25,000. So 151,000 is the capital.
151,000 is your capital.
151,000 is your capital employed. Okay.
Okay,
Next one. What is capital employed?
your total assets
Money used
minus
in
your
business.
current liability. Yeah,
Money used in business.
the business.
How do you get the money used in business? Either it can be capital plus non-current liability, or it could
Yeah.
be total assets minus current liabilities.
Okay.
Okay. So do I need the
Yeah.
non-current liabilities now if I use the second formula?
No, not really.
So I will just add these two and minus this.
Yeah.
So what's it coming up to?
It's coming up to 151000.
It's coming up to 108,100.
Huh?
This is what?
Wait. Oh, wait, I'm on a different question.
67,400?
Wait.
Yeah.
79000
No, darling. Take your
is
calculator.
your
67,400 plus 48,700 minus 8,000. It is coming 108,100.
108,100. 67400. Okay, then you'll add your current assets 48700, and then you'll minus 8,000. Okay, yeah, 108100. D.
Fine. You did the 11th one.
Yes.
What are they asking to find?
Your credit sales for the year.
When I
So
have
you
to
will
find out the credit sales, which account will
see
I make?
SLCA.
SLCA, normal balance credit set. SLCA is
Debit.
below that.
Below that, it's your
Credit sales.
credit sales.
Everything else will come on the
Debit side. I mean,
credit.
credit side.
Okay, so we start writing our opening balance is 4250
Yeah.
and the
Closing balance
balance.
is 3940.
Okay,
Then where's it gone? Then he has returned goods for 1130, and he has paid by bank transfer 46750.
okay. So what is our credit sales?
Our credit sales is 47570.
Okay. So did you do 46,750 plus 1130 plus 3940? This is
Yeah,
15,820 minus
yeah,
450, 47,570.
okay.
Oh,
Then number 12, it is 15700.
okay. 17 or
Uh,
15,700.
yeah,
Similarly, you had to prepare an SLC,
yeah,
opening, closing. Correct?
yes.
Everything
Number
else
one is opening, number two is closing, number three is your bank receipt,
will come on the
number four
credit
is
side,
discount. Yeah,
80, and goods returned.
yeah,
So 15,700, yeah?
yeah,
You're sure, na? I'm not doing it.
I'm sure.
Okay, fine. Next, what do they want?
They want your uh the value of your inventory, which is 2000. So
How do
for
you
this
get
you
that?
can,
So first
so
you do
first we can
revenue
turn markup into margin.
minus cost of sales. It gives you gross profit.
Yeah,
Okay?
you can turn markup into margin.
No, no,
So
no.
we'll give
You have
you
revenue
20% margin.
60,000. Just hang on. And markup is 25%. Markup
Huh.
means on.
Uh,
Markup means
Markup means on cost of sales.
so markup is on costs. But do I have the
Huh.
cost?
No.
So I have sales.
Yeah.
So I
So
can
you
convert
can
the
find,
markup to margin.
yeah, which is 20%.
So it was 25% on costs.
Yeah.
That means it was one fourth on costs.
Yeah.
So it will become one fifth on sales.
Yeah. So it's 20% of 60,000, which will give us a gross profit of 12,000. Then we'll minus our 12,000 from our revenue, which will give us cost of sales of 48,000. Then from 48,000, we'll minus the,
So we'll write our cost of sales is opening plus purchases minus closing.
yeah,
Cost of sales is 48,000. Opening inventory is 6,000.
1,000,
Purchases is 42,000
44,000.
and minus
Yeah,
closing. So
so
we just
closing inventory
add
is
these two
2,000.
and minus the cost of sales, right?
Yeah,
So it is 6,000 plus 44,000 minus 48,000.
yeah,
So closing inventory is 2,000.
2,000.
Okay, lovely. Next one, markup.
I haven't done this yet.
Markup means what?
Markup means on your cost of
Gross
sales.
profit divided by cost of sales into 100.
Yeah.
You have your gross
So your
profit as
gross profit,
90,000.
yeah.
You don't have your cost of sales.
So you can do revenue minus gross profit.
Revenue minus cost of sales is gross profit. Gross profit is 90,000. Revenue is 290,000. So cost of sales will be
Okay, so
200,000.
yeah,
So now this will be what?
2,000. So 90,000
So it's
divided
going to
by
be 90,000
200,000.
divided by 200,000
So 45%.
into 100. So it is going to be 45%. Lovely. Let's go to the next one. I'm
Okay,
looking to find purchases. I'll wait for you to do it and then we can do it together.
okay.
Come on. 15 sum. What are we asked to find?
15 some,
Purchases. Right?
yeah,
So we said revenue minus cost of sales would give us gross profit minus expenses would give us profit.
yeah,
Okay. We have revenue as 5,000. We don't have cost of sales. We don't have gross profit. We have expenses 1,400 and we have our profit as 500.
yeah.
This will help us to find the gross profit. How much? If you're going
Uh,
from down to up, you do reverse. So
yeah,
500 plus 1,400, our gross profit is 1,900. And our cost of sales, again, you would do reverse, it is 3,100. Correct?
yeah,
But we don't want cost of sales, we want purchases. So how do you find
yeah,
purchases? It's a first year of trading, so no opening inventory. Cost
yeah,
of sales is made up of opening plus purchases minus closing.
yeah. But since it's first year, there's no opening inventory.
And purchases,
So
I
it's
don't
just
know.
purchase minus closing.
Minus closing, it's going to give 3,100. So again, you go reverse 3,100 plus 800. So the
Plus
purchases would
800.
be 3,900.
So 900. Yeah,
Yeah?
yeah.
Okay, fine. Now we go to the 16th one. What is there in the 16th one?
You have to calculate his revenue to the nearest dollar.
Okay. What is being given to us?
The gross profit margin
Is
is
30%.
30%. His purchases 3,400, and his inventory has increased by 400.
So I have revenue minus cost of sales. It gives us gross profit. So I've been given
Yeah,
margin, but I don't have revenue.
yeah,
Yeah. But they've given me details about the Cost of
Percentage.
sales.
Yeah.
How will I find the cost of sales?
Okay, so cost of sales are
Opening
39.
plus
Huh?
purchases
Yeah.
minus closing.
Yeah.
Okay. Purchases is 3,400 and inventory has increased by 400. So I would say if the opening was 1,000, the
So
closing would have been
1,400. So you will
1,400.
reduce. So 3,000.
So cost of sales would be
3,000.
3,400 plus 1,000 minus 1,400. Cost of
Yeah.
sales is
3,000.
3,000.
Yeah.
Now I have gross profit that is 30% on sales.
Okay.
So if I want to go from on sales to on cost, what will I do?
Markup.
I want to go from margin to markup. So since I want to
Yeah.
go from a higher number to a lower number, so I'm going to minus the numerator from the denominator.
Huh.
Correct?
Yes.
Going to be 30 on 70 on cost. If I want to go from
30.
sales to cost, I have to come down.
Yeah. Then
I
you have to
minus
add.
the numerator from the denominator.
Yeah.
So gross profit would be 30 by 70 on the cost of 3,000.
Yeah.
So what did it come up to?
30 by 70 times 3,000. Wait, my
1285.
bad. 30 divided by 70. Hmm.
1285, right?
Uh,
1285
yeah,
or
yeah,
1286.
1285.7.
Okay, either 1285 or 1286. Now I
Yeah,
need
1286.
revenue.
Yeah,
So I will go
so
reverse.
you add plus 3,000.
So 4286.
Yeah, 4286.
Okay, and they said to the nearest dollar. That means I rounded it off.
Yeah, 4286.
Okay, fine.
Next one's 50%.
How?
How revenue is 1050.
Hmm?
Your opening inventory is 50 plus purchases, which is 800. So this is 850. Then you'll minus your closing inventory of 150, which gives you 700.
Hmm?
Okay. So 700, and then your gross profit comes out to 350.
Hmm?
350 upon 700 times 100 equals to 50%.
Okay. 18th one.
18th one.
Okay, we had to find
Okay.
out how will I calculate credit sales. That means I make an SLC. SLC has opening balance, credit sales. Everything
Credit
is on
sales.
the credit side.
Yeah.
So closing plus bank plus discount allowed. If I do
Yeah.
this total, I can come over here. Opening is not there.
Yeah.
So closing plus cash received plus discount allowed. The correct option is option B.
B. Yeah.
Okay. So with this, we complete our MCQ part of the worksheet, which is part A of our worksheet. Okay.